And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show on AM 1170 The Answer. I am Michael Gaddis of FrontierLoanGroup.com. And I want to talk a little bit about reverse mortgages. I know I talk about it a lot, but I want to talk about it again. And one of the things I want to talk about is I travel throughout Southern California. I go to a lot of events, and I'm a speaker on reverse mortgages at a lot of different places. And one of the things I always notice is that when I go to some of these events, there's always one or two people sitting in the crowd giving me dirty looks. And I look at them, or they'll walk past the booth I'm at and shaking their head, and I'm thinking, I don't think they really understand what reverse mortgages are, because nobody should walk past my booth and give me a dirty look or cringe their face. They might walk past the booth and say, oh, well, that's a reverse mortgage. It's not right for me, but they shouldn't do that. And the reason they do that is because they don't understand it. So recently, my graphic designer created a piece for me. It says, before you judge, learn the facts. And it actually says, before you judge reverse mortgages, learn the facts. And he put a little gavel on there and everything. It's a really well done piece of marketing material. But I want to go through some of the things that you need to learn, or at least know, about a reverse mortgage, so that you can not just be preconditioned to judge it in a negative way. Number one, reverse mortgages do not have to be costly to get into. There are ways to substantially reduce, or in some cases, completely eliminate closing costs. So I know a lot, one of the things people always say is, oh, they're really expensive to get into. They don't have to be. If you choose someone who really understands how reverse mortgages work, then they're going to be able to kind of find a way to try to minimize your costs or eliminate them entirely. And there are ways to do that. I do that all the time. People who are in the process of getting reverse mortgages will contact me, and they will say, hey, can you take a look at what these people are offering me, what this other company is offering me, and see what you can do. And I do it all the time. All the time I find ways and there's a lot of different mechanisms for doing it, but I'm always able to find a way to put them in a much better position. So don't be just turned off because you've heard rumors that they cost so much money. There are ways to either reduce or eliminate them. Number two, you keep title to your home. You do not lose title to your home with a reverse mortgage. You absolutely do not lose title. Now, that's one of the biggest misconceptions out there. I get that all the time. Well, I don't want to turn my house over to the bank. You do not. The house remains yours. Number three, you can live in your house for as long as you live or continue living in the house. And what that means is, obviously, as long as you live, you can live there. Or as long as you are continuously there if you're not continuously there for more than a year, then the lender could technically call the note due. And what that means is, if you go to an assisted living facility, so to speak, and you move out of your house and you don't come back for over a year, well, at that point in time, that's when they consider that, okay, you're not utilizing the house anymore. Now, let's say you go and live with your granddaughter for 3 or 4 months out of the year and you come back the rest of the year, then you're fine. It's just if you don't continue to live there for more than 1 year. So you can basically live in the house as long as you want or are able to live in the house. Number four, you can eliminate your mortgage payments. There are no monthly payments required by you. However, you still will be responsible for property taxes, hazard insurance, etc. I was at an event this weekend and somebody asked me about a reverse mortgage, and I showed him an example of one that I recently did. And the guy asked me, he says, well, why would this woman do a reverse mortgage? I don't understand. And I said, well, let me tell you. This woman is 80 years old. She makes $1,800 a month. That's how much she brings home between Social Security and her small pension that she has. And she only has $2,500 in the bank. Her existing mortgage takes up $1,100 of her $1,800 a month. And so she's left with $700 to buy groceries, to buy gas, to pay her credit card bills, to pay her car payment. All of that, and her property taxes, her insurance, all of that comes out of that $700. So you're saying, well, how does she do that? She hasn't been. She's been subsidizing from her savings. And so every month she's been taking money out of her savings to compensate for that. And she told me that it was roughly about $800 a month that she was basically subsidizing, and now she's down to only $2,500. So when we put her into a reverse mortgage, it basically eliminated her house payment. She didn't have to pay it anymore. And just keep in mind, this woman has no relatives. She's by herself. She has no family. She has no daughters, no sons, nothing. She's by herself. So she basically, when we got her into the reverse mortgage, her $1,100 a month house payment went away, which immediately allowed her to not have to subsidize with her savings. So that $2,500 that she has in the bank can stay there. She's not going to have to draw from it, because that $2,500 has a finite amount of time. So there's only so many more months she can do that. Basically 3 more months, and then she would not be able to do it, and she would be in danger of losing her house. So the reverse mortgage is literally a lifesaver for her by eliminating her house payments alone. Now, we were able to establish a line of credit for her as well, so that she could pull from in the event she needs it. And that goes into number 5 of something that you should know, which is that line of credits in reverse mortgages grow. They actually grow at very good interest rates. They grow by the amount of your interest rate plus your monthly mortgage insurance. So in her example, I believe her interest rate ended up being somewhere, I don't know where it was. It was up around 5 or so. So her line of credit that she established is going to grow by that amount every single year. Now, it only grows on the unused portion. So, it's very important that at least I tell my clients, don't tap into it unless you need it. Number 6, many certified financial planners believe that in the right situation, reverse mortgages are a viable financial planning tool for retirees. It is the opinions of a lot of financial planners are beginning to change. Not every financial planner is on board, but many of them are. And I just interviewed one on TV not too long ago and had him on the radio show, I think 3 weeks ago, Gray Hemfar of GFH Financial. He basically was telling me that he thinks in the right situation that they are very viable, tools for retirees. And he is a certified financial planner. So, number 7, a reverse mortgage can allow a senior that is surviving to enhance their quality of life and truly live, just like the example I gave you a few moments ago. Basically, a reverse mortgage is a lifesaver. Nobody works their entire life to have to live, basically like she was living. Nobody does that. Who when they're young says, boy, I can't wait till I'm 80 years old and I'm living off Social Security and a small pension and have to subsidize from my savings every month? Who thinks that? No one thinks that. And if there's a way to fix that and she had the mechanism to do it, then by all means she should. And now her quality of life is greatly enhanced. Number 8, Social Security and Medicare benefits are unaffected. They do not. Social Security and Medicare are. Medicare are not affected by reverse mortgage, so you don't have to worry about that. Number 9, reverse mortgages are flexible. They have many methods and combinations of disbursement. They are one of the most flexible loan products on the market today. And since reverse mortgage is a very personal decision, it's the most subjective analysis of any loan product out there. It's based upon every single person's individual, set of circumstances. The fact that this is so flexible really allows people to utilize them in different ways. So the 80-year-old might have used it in one way, and somebody else might use it in a different way. And number 10, once you pass away, the remaining equity belongs to your children and your heirs. It does not go to the lender. So many people tell me that they're basically signing away their inheritance of their children, and that is not true. Whatever unused portion is there is basically your children's. So, I want to thank everyone for listening to the show today, and I want to thank my special guest, Pat Hodgkin of FirstAmericanTrust.com. And I will be back here next Wednesday night at 8 p.m., as always, talking about anything and everything related to real estate. You are listening to The Michael Gaddis Show on AM 1170, The Answer.